Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. How we doing in YouTube and the Bookmap Discord Trader Lab community? Thank you, Marty. I think we should change your username, Marty, to Quick Draw. Yeah, good morning. Thanks, Cross, and thanks, everybody. Well, welcome to the Traders Lab. I'm your host, Tom B. The stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on market mechanics and helping developing traders understand the business they're trying to be in. The market is not a plug and play process of time frames and indicators. It's much more than that. And yet, while it's more than that, it's also less than that. Doesn't that sound contradictory? Well, the Trader Lab is about understanding that the process of trading is really not complicated. Most of us, as developing retail traders, add all the noise in and all the complication in, which for most retail traders ends up in lack of sustainability and leaving the business. And everyone who's gone through this development process, really, we all walk in the same shoes. The difference is we don't have unlimited funding and we don't have unlimited time. And if we keep doing a process that actually is not in alignment with the business we're trying to be in, then I don't think it's realistic to expect a positive outcome. Though, of course, you may be special and maybe you'll beat the statistical odds, but most developing traders run out of time and assets, and also can never solve the issue. The issue, at least in my opinion and from my experience, is the tools and the understanding of what you're trying to accomplish, what might fit in this business, and the things that we bring to the business that are not in alignment with it. That's the function and the purpose of the Bookmap Discord Trader Lab community, and it's a no-cost community. Now let's walk together and let's see what this is all about, and if this is something that might help you on your journey. I'm going to go over higher time frame integration. In other words, how do you put this puzzle together, the pieces? Well, if we tear it apart and then put it back together in its most essential basic elements, then maybe we can rip the noise out and try to get to the substance of the market. And then when we understand the market from us, how it actually works, its mechanics, then potentially we can align with it and overlay processes and structured trades that can allow us, if we do the work, to develop what's called a statistical edge. So we only interact with the other market participants when that edge shows up. And the rest of the time, we're tourists. Because we all have a choice to make in this business. Do we want to sit with the gamblers, just making it up and letting our emotional states generate our activity, our fear and FOMO? Or do we actually want to walk into this with a plan and differentiate our own behavior from the outcome and behavior of the other traders we're competing against? General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. One moment, please. I got to adjust some levels in my Investor RT. I'm going to show you Investor RT. It's by higher time frame charting software, and it also exports to my Bookmap. So pretty darn useful for that. And it does this in real time. By the way, the structured trades I refer to in here, you can see them in here. I'm not a vendor. It's not a trading course specifically, and there is no plug and play. Trading is not mechanical. It is something called contextual. And most traders have no understanding of something called context. And the reason for that is everybody starts with indicators, and indicators are doing the work. Unfortunately, indicators kind of stupid. And I didn't say dumb, I said stupid. I just want to make a point. They are not contextually sensitive. Now, they may have a place, but if you don't understand market mechanics and how it works, you're just going to throw a grenade into your potential business development. And that's, again, just my opinion. It might not be appropriate for you. So let's go take a look. Now, this is the ETH. Now, I do a couple of things here to help traders understand what's going on. And this is the language of the market. Now, this thing about language, actually, I want to show you something first. Then you'll see how this might fit together, hopefully. Let's see. This is the higher time frame. Now, this is yesterday, up to yesterday's RTH. And you'll see the market, we broke out. We had tested a key level from above to low. This is the auction. And then we get our buyers. Now over here, and this is a target from yesterday, 59.28 is the top of this consolidation. And you know, if we have a high here and a high here, and then it does the Acapulco cliff dive, there's buy stops and buy stops. Well, where'd we go yesterday? 59.44. So yesterday, the target was come out above here and then 30 and whatever, up here. So we got the 44, a very nice day if you were in the trader lab. And you could be trading this longs, you could be trading shorts, you could do anything you want in here. It's all a matter of your trade plan. So where are our targets? Now, here's what I'm going to show you today, something a little different. First of all, this is on this down day, which is, notice by the way what the market does. Market goes down to go up. The market goes up to go down. The market goes down to go up. The market, remember this, the market goes up to go down. And then the market goes down to go up. The market goes up to go down. Just don't forget that. So what's the market doing? Up, up, down, inside. Yesterday opens low, takes out the stops under here, and then the buyers come for it. That sets your long up. This is like an inventory grab. But this is what's important. The retail price from yesterday is 59.27 half. This is a higher time frame outside edge, 59.61. You'll see why this stuff matters. And this is the day we are trading inside of now. And this is all going to be material. Now let's go a little further. This is that day we're trading inside of. And this is a volume profile, okay? Now let's take a look at what it says. This is language. I don't use any indicators. Again, only reason is, been there, done that, not interested. I speak a foreign language, language of the market. And I found instead of having a Google translate the market with spaghetti up on the screen, and we tend to throw tons of spaghetti on because we're looking for certainty and confirmation. By the way, is that in your vocabulary? That tells you something about your needs and your mental state as you relate to risk. Another conversation, another time. Come to Trader Lab if that's you. This is what's called a high volume node. And just it is probably around, I didn't mark the price, 75 or so. Not important. This is important. This is a low volume node. And this yellow line up here is a naked volume point of control. Now, let me explain these terms. When the market was jumped out the window over here, at the time, this is where the highest volume was. And what the market tends to do is it rotates. So it's, I'm not paying that. Yeah, but it's on sale. Retail, highest volume. When you go shopping in the store, it's the same concept. If it's too high, you don't pay it. There's less buyers. If it's on sale, you throw 5 in the cart, and this is the retail price. And you'll buy that also for the tuna casserole if you need it. In fact, if you're desperate for your casserole tonight, you're going to pay up, but you're not going to like it. You only throw 1 in the cart, and you'll give them a dirty look. Oh, it's on sale, 5 in the cart, you see. So this is what creates our rotations in all fractals and time frames, retail. Now, if this becomes too high, and we do the Acapulco cliff dive, now this line here is called a low volume node. It separates distributions. And now we start a new rotation. That absolutely allows us to sell this and trade to this, and then it falls out here, and it's all the same. But these are important levels. Now let's go a little further. I'm going to show you yesterday. Now remember, I'm just taking you to another viewpoint. This is yesterday's retail price. Before we got up here, we were down in here. And if you remember from the stream yesterday, I was taking shorts. Other traders in Trader Lab were taking longs. And they got the better end of the deal. But here's what I knew yesterday. This is called the single print, and I'll explain what these are. And I'm going into auction mechanics. And on this day, I was looking for it to take out that high and that high, because there's the buy stops. That was the breakout I was showing you. Instead, we set up and it was shorts. So I was on the short side here, and I'm asking myself, what are you doing on the short side? Well, that's my plan. I don't know. But what else do I know? If I come out here and I know this is, remember the rotation, oh, it's on sale. I'm not paying that retail. Then if I come out here and I find too low, we have a structured trade in Trader Lab called the IBF. And the IBF is a mean reversion trade. I found too low. Oh, it's on sale. Remember? Oh, it's really on sale. Long. And then the trade for this day was to take out the shorts here and squeeze up. Okay. It didn't happen. Instead, we closed what's called in balance right at the retail price. It's like, hey, what's going on? Well, here's what's going on. Where's the stops? Here and here. Well, where do we open? Here, fair price, do a little chug along in value, and then what do? Take the stops out under here. Liquidity grab. So for me, it was shorts, and then the long setup down here, but I'll go into that later. So this is what we were doing in the morning. But once we got under here, that sets up, if there's no further extension, then to get long. So what happened to me was I was on shorts, having a great morning, and then I was exiting where I should have gotten long. When I say shoulda, I just, what happens to me, and it's just call it a weak element in my plan, is if I'm on one side and it changes, if I'm monitoring a short, I'm not thinking get long, I'm thinking manage short. It's just one of those things that I've observed in myself. So I accept it. I try to do better. So my long was here yesterday, and I got all this. So I'm just saying, okay? It's just trading. What are you going to do? I wish I told you there was a magic 8-ball. Now, remember I'm talking about singles? What is our high of the day so far? Right at 59.48, which is a single. Are you guys with me? This was the first target. Now, if you're confused by this, don't be concerned. This is the auction, and you can learn this. It's not complicated. If you can shop, you can learn. And there's the single that I just showed you, okay? Now, we don't know anything. Let me tell you what we do know. And by the way, if you have questions, please post them. I can't see them as I'm narrating here. They're on different monitors, in fact, different computers, but I will do my best. Is there something wrong here? Hold on a second. Is YouTube okay, guys? Or are we having a problem here? Something's not working right for me. One moment. Let me see if I can get this going. How we doing in YouTube? I seem to have a little bit of a issue going on here. Okay, great. Thanks, everybody. All right. So This is, I'm going to show you how, just some ideas. And there's no right or wrong way to trade. You know, I'm not a judge. I don't, I can't judge anybody. I only had to find what I relate to. And I come from a place of complexity would kind of give me the edge. You know, more is better. I mean, isn't that logical? Well, what I found was more is the problem. Less creates, hold on, more clarity. Let's try this again. This is the retail price. Remember, where the most volume is in the ETH. So that's one piece. The other piece is the ETH high is up here. So I have over 90% probability, past performance not indicative of future results, to get either the ETH high or low. Who knows? For me, the trend is up, so I have a couple choices. I can just take longs because that's the trend, or subject to my plan, I can trade either side. Both sides, doesn't matter. You know, that's up to you, not up to me. Let's look what happens here. So liquidity here, and this sets up. Now, this is the full session VWAP. There is a structured trade in Trader Lab, and this is not necessarily qualified. I'm just mentioning it. VWAP to VPOG. This is a structured trade. Now, it's either you could take this trade if you want. The primary target is this, and then potentially up to out the top. And once we're back in here, I have to be conscious of this and this distribution. So this is a distribution. This is your shopping experience. Oh, it's on sale. I'm not paying that. And if you fall out, then you start the process in a different location. Anyway, retail price. I'm going to show you structure now. And all I'm doing, this is not magic, is I'm isolating changes in behavior. And the reason it's important is something changed here. Right here is a short trigger. Now, it doesn't mean you take a short. For me, if I took a long here in the ETH, I'm scaling here, and then I put my helmet on, and I might go for that or not. But right here, let's look at micro for a moment. The buyers are here. This is the retail price. Remember, can of tuna in the ETH. Everybody's willing to do business here. But what happens if this price becomes too high? What will the shoppers do? You know, Bertha, this is expensive. Buyers are there. Buyers are here. Buyers are here. Sellers are there. Buyers overwhelm. The sellers, this becomes support. It's right there. Buyers are here. Buyers are here. Buyers are here. Buyers are there. Break below. Support is there. Buyers are above the sellers who are there. Buyers are here. Buyers are there. Support. I'm above. Going to the moon, Alice. Liquidity stacking. No clue. What do I see? Icebergs. Icebergs. Buy stops. Thanks for playing. This is when we send them the coupon to the buffet. Icebergs, those are passive sellers, and the sellers take control here. Where am I? Below the buyers, below the buyers, below the buyers. And if I get into fractals and I take the electron microscope out, which is not necessary, this is where it changes right there. Don't have to. Seller, below the buyers. You know, support and resistance, that primitive concept. Sellers are here. How do I know? Absorption. When do I know? Over here. Do I know here? Nope. Going to the moon, Alice. Change. Do you see anything like that elsewhere? Well, there's a little bit there, but the buyers are here, right? So, absorption. That's all I know. If you see delta and it doesn't go down, what does it mean? Passive side is absorbing. Buyers are above the sellers. So I'm just showing you. Now here, the buyers were here. And of course, the buyers are up here. But once I'm under this, these guys were absorbed. They're on the hook. I got my icebergs. I'll catch you later. Break low is a trigger. Now, where's resistance? It's there. Why? Let's talk the language of the market. And I spend time here so I can zip around quicker. This is a trigger. Now, I don't know. Here's what I know. I'm not paying that. Let's get in the car, Bertha. Bertha likes shopping down the street, though. I'm not going to pay that. This sets up a short or an exit. Doesn't have to be a short. Now, I'm going to move this over, and someday Bookmap will get around to letting this just go all the way to the right, so I don't have to keep doing this. Now, we get into the RTH open. Where's my resistance? It's here. Now, this is not a short. It's just information. Let's remember where this is. And this now becomes a target because it was too high. If I leave it, I can come back and test it. So for me, I have two choices. I can take shorts, which is not in my plan, unless I'm a counter trend trader, which I can, but let's just say for a stream here, you want to always align with the advancing army. So let's look. This is called VPOC migration. I made this up. I had no clue when I first started doing research on all this stuff. I was like, what's that? You ever look at something and go, what is that? And at the time, it was just market profile. There was no volume profile. And I would observe behavior with something called the point of control. Not important, except market profile is time-based. So this is too high. And the thing is, at RTH open, this is the developing volume point of control, starts at 0. So at the RTH open, this thing resets and the volume starts coming in. And as it comes in, this is the auction. So too high, too low, retail. I'm not paying that. And we leave the store. Too high. Now what? VPOC migration. What does that say? Let's label it. Now, I'm labeling it so you can kind of see what the market is trying to do. It's trying to figure out in a micro, really, and we're in this thing maybe 10 seconds, so you can see this is pretty, you really got to have if you're going to trade this is not where you trade. This is the last place you want to trade. You'll take a lot of stops and maybe put yourself out of business if you have FOMO. Because a lot of retail traders come to Trader Lab, and it's just human nature to say, hey, there's 15 structured trades. I'm going to take 10 of them. That's FOMO. If you can't do one, you won't do any. So I always say, and for those who follow some advice from someone who's doing it going on 46 years, take one. And proof of concept, it's like a pilot project. You prove concept, you execute one, you develop discipline, you find out if it has a statistical edge, and then when it shows up, you show up. That's trading. Anything in between, gambling. And if you're going to gamble, I always say, get the coupon to the buffet while you're at it. Buy the cocktails. So, too low, too high. Now, I'm in this. Retail is here. Too high. There's the first thing right there that tells you, not the first thing, but let's say an actionable process that says it's going lower. Okay? Now, it doesn't matter. It's not a short unless you trade counter trend. So let's watch. So we come down and look what we have. Up here is an auction. Variable high volume node. I'm not paying that. Remember, too high, too low, retail. If the price is too expensive, the shoppers leave the store. You do the same thing. Now, if this was an automobile dealership, you would certainly leave if the price was too high. If you're buying a can of tuna, you might have a different viewpoint. So, too low, too high, retail. Break low. So now what? Resistance, 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 south of the border. Not a short. Let's watch. So going down, what do I know? Statistically, I know the following things. Settlement has a high probability and ETH high and low. And this, naked volume point of control, 2750. Where did that come from? Now, you guys are probably, and I don't know for sure, thinking, show us real time. Hold on. 2750. This is the retail price. There's no precision. So if the market comes down and tests this, that's my retail price. There's no precision. If I find too low, oh, this is a great price, and the buyers like this price, and it becomes too low, I can come across. And if we're in a uptrend, right, and this was where there was urgency yesterday, then this can be support out here. But I find my buyers here, and this is part of the thrill. We don't know where it's going to happen. So let's watch. So I know what's too low. And I know I can come to settlement. I can come to that VPOC and the ETH low. That's my plan. So my plan is dual. I can be short if I'm an aggressive counter trend trader and I have an edge, or I just hang out and work on my crochet and wait for the longs. Because what's the trend? Up. First target would be this if you took a counter trend short. Now, don't go away, just hang out. Where are we trying to go? There, first target, if you took a short. And I always say in Trader Lab, don't trade with the weak side. Get aligned if it's directional. We are in a directional move. So, and another piece. What is today? It's Friday. What happens if you're long? Might you take some profits, get out of Dodge, and go to your house in the Hamptons and sit by the pool, sip a pina colada? Boy, there's some great houses out in the Hamptons too, I got to tell you. Too high? Where's too low? Maybe here. And ETH low. So first target is this. Now let's watch. So right here, we have absorption. Sellers, sellers, sellers. Sell stops coming out. And right here, now there's a couple things you can do with this. You can, if you choose. Now, we have a report at 9 a.m., so you got to be conscious. Michigan Pre can be a mover. And you need to have a calendar, if you don't, to know what's coming up. So I got liquidity here. My sellers are here, and we're going to zero. First target is this. So when I get the target, and it would be a scale if I was on a short, and I'm going to here and here. Right here, I see absorption. Let's look at the trigger. Now, you don't have to be taking these things, of course, You could just be sitting here working on your crochet. Let's come to the microstructure. Sellers are here. The sellers are here. The sellers are there. There. The buyers are here. Sorry, Charlie. You heard of Charlie the tuna? So the sellers are still in control here. Watch. Now, this doesn't mean you take a trade here. This means you learn to understand what you're looking at. And this is where order flow and market mechanics comes in. Sellers are here, and nobody knows. Like right here, sellers are in control, sellers below the buyers, going to zero, Lewis. I'm on my way. I'm already thinking, oh, it's going to be champagne and caviar. Well, not really, but you know what I'm saying. We get that fantasy. Buyers take control here. How do I know? Liquidity was here. Buying icebergs are here. I've got almost 600 icebergs here and here, you see. So I'm seeing, and this is how Bookmap is helping me. I see the liquidity, I see the interaction, and I got liquidity down here. I don't know anything. I know I don't know. I am clueless, but I'm not ignorant. And I don't know where something will happen. I know where it might happen. When I see the buyers above the sellers, then I know this was absorption, and I do have my icebergs, and I break high. This now, the sellers are losing control right here. Now, just to take it a little deeper for you, let me show you this. Now, I'm showing you a trigger. And these will going to show, you're going to see triggers all over the place. And if you don't have discipline and understand market mechanics, you're going to be out of business. You're going to blink and you'll hit your loss limit, because all these is I'm putting together absorption, liquidity, order flow, and location. Think of trading like real estate. You got to have the location. If you don't have the location, you're just trading in the noise. And yeah, you're going to take stops anyway, and so do I. This is the change in behavior. This is where the sellers were overwhelmed by the buyers. This becomes my support to get long. And this is where my volume is, where the shopper said, this price is too low. In other words, in this store, if this price is too low and this price is too low, this is support, this is entry, and then this is resistance. But, now here's the but, and this may fly, as they say, in the face of what might be very rigid structured trading. Part of context is understanding the condition of the market. What do we know? I'm going to extend this because it doesn't extend. What do I know? The overnight volume point of control is the retail price from the ETH. What else do I know? I have that single sitting here. Let's see, and this is yesterday's high, okay? So what do I know? This is a long, and what else do I know? The opening swing high, I believe, is right here, I think. And there's going to be stops for the shorts in this leg. Where is my support? It's there. Where is my resistance? It's there. Right there. So there's no precision in this thing, you know. It would be nice, but it doesn't work that way. Whoop, this is not working. Let me get that out of here. I got to draw this again and extend it for you. Resistance. And there's a sweep, which suggests counter rotation. Now this at 9 a.m. is the Michigan pre. What I always suggest to traders is you get out of Dodge. So this is a long, and you're trying to come to here and to there. That's the long. And then out the top. Because we have over 90% probability of taking out the ETH higher low. So for me, it was longs only. This, so for me, I would not be holding this, or I might, subject to my plan. Let me show you some more. We'll look at this. Follow the yellow brick road. Now, I'm not using indicators. Doesn't mean it might not be a good idea sometimes, but they never were for me. All they did was create conflict, and I couldn't measure anything because I didn't have anchored inputs. This is where the buyers were, right? This is my last long entry. So what do I know? Support. What do I get? Sell sweep. What is this setup? A long. Can I enter here? No. Don't you wish? Me too. What do I have to do? If I know I've got my buyers still at this level, then I need to get long, because all we did was grab inventory and flush everybody out. Thanks for playing. Another coupon to the buffet. Watch. Maybe. Oh, I know what the deal is here. You're going to like this. So this is a long I cannot get. I have an entry here if I can do it, but let's say I cannot. What do I know? I know right here I have rejected this volume. This little node right there is the shoppers going maybe too low. I have the single and I'm still looking for it to come out the top. How do I get long, you're asking? Watch. Let me show you. I don't remember where it exactly was. Here. So how do we know where to get long? Well, first of all, let me make a point. We don't know anything. We know maybe it'll do this, maybe it'll do that. Maybe it'll come back here, maybe it'll get here, maybe it'll fall out the bottom. What is it going to do? I don't know. So I don't need to know because I can't know. Here's what I know. This is too low. And right here, what I know is I've got absorption here. There's my icebergs. Here's a trigger. My resistance is sitting here because I found my sellers. If I get long out here, absorption with a trigger, I can go here. If I'm waiting for stops to get picked, I can just wait. Where am I trying to go here? Outside edge. What's under here? Stops, stops, stop pick, buying icebergs, absorption. Now I'm going to take you to microstructure. Now this is a specific plan in a plan. This is called mean reversion. And we always joke, yeah, it's mean. Why? Where do you get in? Do you get here? Do you buy it here? Where do you buy this? Well, here's what I know. I know my buyers are here. I know my sell stops are here and here. If the market comes down, I am not buying in front of the stops. I want the stops to come out, and then I want to, and these are the stops, market orders, delta, and then reversal. So now I can get long, and I'm trying to come across the range, and take a stop, or whatever the heck happens. Where am I trying to come? Back here. There. See it? Target. And then, no clue. But this is structured trades. Anyway, I wanted to show them to you. Let me move this over, and then I'm going to look up and see if you have questions. These are just longs, no big deal. And yeah, it's like you're sitting in a storm because it's two-sided trade. But this is what the auction does for me. This was too high. Right here. So if it's too high, I can come back here and check it right here. Oh, I'm not paying that. And there's my buy sweep. So as I'm coming up, the sweep shows me maybe there's an excess here and I have my liquidity come in. But what I'm going to be looking at is location, 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 real estate. So right here, if I'm managing the trade, when I see the sweep, I know I can get a counter rotation. Then it's just trade management. Buyers were here. Buyers were there. Buyers, buyers, buyers. Seller. Buyers are here. Sellers are below the buyers. You could be out of this thing, or you have some other trade management process. So for me, there's no shorts. So let's look at the move down. Where do I come? Now, let's go back to the other side of this thing. You always got to think from two sides. If I find too high, where's my stops? Under here and under the swing low. Where's my potential targets down here? Now I have this and the ETH low because this was the retail price. I'm trading the auction. Too high? I'm not paying that. Oh, maybe it's on sale over here. Let's see. Now, part of this is, how do you know? Guess what? Don't know. Coming down, going here. Over 90% probability. Well, what happens though? I come outside and I'm thinking ETH low. I certainly am. But I only want longs unless I'm counter trend. So I'm seeing my sellers going to zero. What happens here? Micro high volume. Now, whether or not you will be able to read this and activate is a whole different conversation. But I'm going to show you the structure. And then what you guys ought to do is review these streams if you're inclined and screenshot this stuff, because you need to develop unconscious competence. So what I do is it's not lines on a chart and it's hard. In other words, if it doesn't hit this, it's areas of behavior. So let's think of it this way. In the ETH, and this is yesterday's high volume or retail price, the shoppers, and there's no precision. If I come down in ETH and test the most accepted price yesterday, in other words, fair, and it's too low, and this is just an area, and I come all the way across, is it possible? That's all I'm asking you. Possible that if we do the same thing in the RTH and we find that this is still too low, that we can come back across the range. And it's always like, I don't know. Not my job. Absorption and no clue. So I am clueless. Buyers get above the sellers. So this is absorption. I do not know that. There's the buy icebergs. Hey, there could be buy icebergs here. And I mean, there's buy icebergs there. Why don't we go up from there? Well, we don't have a trigger. Do we? No. And what else is this? This is advanced. Now I'm going to show you an advanced concept. Just a little something to whet your appetite on what you can do when you get more advanced. Now, if you incorporate advanced concepts, you're on your way out the door. You don't need them, but it adds another element to recognize behavior. So my sellers were here, and I had my liquidity here. I had these guys buying icebergs are in this. We get below them, they become resistance. It's right there. So what do I have? Absorption, sellers, buyers. No clue. Going to zero. What happens? If the sellers are here, and of course here, and this is resistance, if I can get above it and break out, then I can test this. If it's too low and I get above this, then I have the possibility to go north of the border. Now we have a structured trade in here called the IBF. It's in those 60 PDFs I share. And it's here. Let me show it to you. So you don't have to be doing anything with this. This is more advanced. But if you're leaning on structured trades, this is along in the Trader Lab right here. Here's how it works. You know right here, resistance here. This is another one. I forgot the market. Let's look. I am organizing participant behavior into something I can interpret. Absorption, resistance, break high, resistance, break high, resistance, break high. I'm in an uptrend, long, structured trade against this volume. Stop would go under here, stop could go under here. If you get long here, once we break away, you can leave your stop here or bring it here. Why? Sellers were here. They were absorbed. When you see the delta, now where am I going? There, and the idea is to go out the top, maybe. Let's see. This is the target, and this is a target. Right? You notice all we did is when we came up here, we tested it too high. That sets up where we go back and test this. This is language. When this is too high, where's the last location? This is retail from the ETH. I'm not paying that. Well, let's get in the car and drive cross town here and let's check this one. Oh, I like that better. Let's buy this. But now it's sold out. Well, where are we going to come back? Let's drive back to the next store. And I hope I'm not insulting anybody, but what's really going on in the auction is testing prices. What's too high? What's too low? I don't know. Well, let's figure that out. Then what? Where are we? I don't even know where we are. Over 90% probability to get here. And what's the target in the higher time frame? 61-ish, not a recommendation. I think I'm current. Holy mackerel. Thank you, Stephen. Yes. Hit the like if you're visiting in YouTube. Hope you're getting something out of this, guys. And this is Trader Lab. And you guys, if you're visiting in YouTube, there's a link down there. You can learn this. I mean, I'm not saying you can. I mean, you got to do a lot of work. The work means you need. And I don't know. I don't want anyone to be uncomfortable. What I'm going to say is when we come to this business, I think we have a fantasy. In other words, what we imagine it to be. You know, get the indicators and the time frame, sort them out, and the ATM gets moved into the basement. Well, and I like to mention this every time I do this stream because my belief was I can create certainty and confirmation with indicators and the right time frames. So you get your software toolbox, it's got 200 indicators, and then you spend the time you have to develop a business trying to sort them out. And typically what happens is we put multiple indicators together and they all have winning trades. There's the fallacy because gamblers win at the table, but over time they lose. Or over time, let's just say the house extracts the dollars from the gamblers over a random distribution of outcomes. We are in a gaming business. We're not in the business of being right. If the casinos can't sort out the difference between winning and losing hands, then what do? They only play games with an edge. So trading is really about edge and not getting involved where you don't have an edge. And you need to learn where that edge might be and then have anchored inputs. And anyone who's built trading systems understands there's conditional behaviors in a trading system. So if this, then that, then what? Then what do you anticipate? If it doesn't happen, then what? Well, first time up, if I don't get over the ETH volume point of control, wherever then I can potentially come back and check what was too low. If it's still too low, I'll come back and check what was too high. But this time I got shorts. By the way, this is a trade here, a structured trade. Let me show it to you. So we had the IBF, which is a reversion trade. Come back here. This is called the IB continuation trade. Now, the thing to be conscious of, this is two-sided trading in alignment with an uptrend. If you take a long up here, it's qualified. However, the potential exists at some point today to come back in here, maybe, and fall back inside. That's possible. Currently, we have something called a neutral day. A neutral day is both sides are active. The thing to keep in mind about today is it's Friday and getting that responsive selling, which is why the shorts why we were looking for longs when the current longs responded and got out. They're the weak side. They're not the strong side. So for me, that's why it was longs only, unless I'm a counter trend trader. And, I suggest for developing traders, you want to align with the advancing army, the strength. You got more edge, obviously, trading with the dominant side than you do joining the weak side, which is the counter trend traders. Does that make sense, guys? No, Ben. Today it's the long at the IB is qualified today because we're trading inside of a fractal or higher time frame. Here's where we're actually trading. We're out here now someplace. And I don't know what the current, maybe I can find the current price here somewhere. Gotta look. I think we're at 59.52. Is that right? No. Is that correct? Maybe. Yeah. 59.52. So we're really up here. Our next targeting is 61, and we're trading this day, basically inside of this day. So if I come outside, I've got nothing here really. I just have nothing. This is not auction well. So the market tends to finish the job. In the higher time frame, as you think of it, this out here, this is the low volume area. So the market has a tendency to trade into these areas. And if we get rolling, we can get here, but that doesn't matter. I kind of stay a little bit more since I'm trading rotations. I'm going to stay here. So if I take a long, I got to get risk neutral, and then I just manage my trade. Here's what I know. And this is also another entry. I'm going to show you guys some advanced concepts, not suggesting anything for anybody. I don't, what do I know? You see, when I say I don't know, it releases me and mentally from defending or getting myopic of what I, quote, think. What I think has very little to do with what will happen. I know what might happen. That's as far as I get with this. I know where it might happen. I know why it might happen. I know what this is right here. What is this? This is the IB continuation trade. And where does it set up? It sets up here. Now, when it breaks away and I have this and I break above it, I can get long here. This is advanced. I'm also above a single, which I pointed out to you at 49.5, becomes support. If that's your thing, let me show you where all this stuff is coming from. This is the single. So that's my resistance. If I get above it, it can become support. The IB high becomes a long. So when we came out, we came down wherever it was, I don't remember, and then come IBF, which is the long, come out the top, and now we have a neutral day. Here's the possibilities for today. Based on the current configuration, we can keep going, of course, because the trend is up and we're out in space. Remember where we are in the higher time frame. We are, as they say, going to the moon, right? You have to keep the pieces in mind. If I'm out in here, I've broken out. I'm above this resistance where the stops are. What is stopping this from going up somewhere? Nothing at the moment. So we don't know where it'll go. It doesn't matter what day it is, but I can keep going. And then I have something called a neutral extreme day, where it basically checked out on the downside and said, nah, we'll see you later. And now we're motoring up. And if we're motoring up with nothing here, it can do something called neutral extreme. And that is the market goes from balance, rotations, to trend. Or it can go outside and then fall back in. Those are the two possibilities right now. So what do I want to do? North by northwest, preferably north. Are you guys tracking? No, Ben, I hope I answered you, Ben. Ben, we're in an uptrend. The buyers came for it, and the long is qualified because of context and being out of balance. Directional moves come from being out of balance. Now, this is part of what understanding context is for all of us. When the market's rotational, two-sided trade, it's in balance. In other words, it's going, it's too high. Then it goes, it's on sale. And we slosh around the retail price. When we break out of the two-sided trade, we get directional. That's trending or directional move. When that happens, then I'm only on longs anyway, but then I want to be long, and I'm going for a statistic that has over 90% probability. Past performance, not indicative of future results. I'm going for this. So, Ben, I'm putting pieces together and I'm using statistics to kind of guide the oil tanker here, the barge. So I'm aiming the barge in alignment with a higher time frame, and I have statistics. And by the way, getting down to this, by the way, overnight high or low, which is why this was a potential target, is over 90%. We didn't get it. Right away, when we don't get this, and I come back over this, which I think, and don't quote me, you got to vet it, has about a 68 or 70% probability. Once this happens, and that does not happen, and I get the IBF, which is coming back across and aligning, now I have shorts in the market. I did not get this, which I don't know until hindsight, and now I have a long. Now, if I come out the top, I'm now directional, and the shorts who are in the short side, the responders, are now, as they say, on the rotisserie, on the barbecue. And their stops are up here, and then I'm going for the 90% probability here, and maybe higher. Does that make sense, Ben? So, Ben, it is qualified for long. Ben, are you in Trader Lab? Yeah, how about a like, guys, if you're visiting in YouTube? Always nice. We appreciate the like. Now, remember what today's scenario is. This is the next target. And of course, like everything, it's a 90% probability is not 100%. Now, let's talk about what's happening right now. I'm going to take you into something, again, more nuanced. What is the auction, right? How do you measure this thing? Well, this is an auction. Oh, it's on sale. I'm not paying that. See how the volume tapers, and down here the volume tapers? This is a low volume node. What does it say? Language, 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 language. Well, this is what I know. Support. If I come out here, support. If I come out here, support. If I come out here, support. Just saying. And where's that node? It's right here. The tendency of the market, and I'm not saying it will, this is like maybe is the best you got, in trading. Maybe it'll do this, maybe it'll do that. Who knows? Not my job. Sell stops are here, sell stops are there, sell stops are there, and sell stops will be here. If I can get to my target, great. If I don't, I can come out here, pick these guys off, pick the stops, and then I'm going to look for the buyers that were here. And if I get absorption, it would set up, and this is not a recommendation, I'm giving you a sense of mechanics. If I come under here, where were my sellers last? They were right there. I'm going to draw a little box because now I'm defining where my aggressors were and where the other side failed, which was, see if this doesn't look familiar to you. Watch. Sellers are here. Buyers are here. There's the absorption. Break high. Resistance is here. Break high. Support. Support. If I counter rotate, I'm going to be looking here for continuation longs and possibly here. So I already know that. And why would that be? Because this is where we left this distribution. I've got my IB, which is the first hour's high. So this is support. This is support. There's also stops here and here. So these are areas for longs. Now, meanwhile, back at the current long, this is where we're trying to go. So I already know if it comes out here and I get a trigger, I go long again. If it keeps going and it never looks back, I'm sitting in a long. You guys have questions, and this is not anything more than understanding how to build out a trade plan, the business of trading, why you're not making it up and playing a video game. Of course, that's up to you. And that you only take trades that have an edge. And over time, even though you're going to take stops, we all do, overhead and cost of production. Remember, the casinos pay the gamblers. They're okay with it. You got to become okay with it. This is not a business of being right. It's not a business of confirmation. It doesn't exist. If you can't confirm something, then maybe you want to solve for something else. If you're in an environment that's 100% random 100% of the time, if you can accept that, then how can you create certainty where it doesn't exist? That is, I think, the catch-22 for us as traders, thinking that there's a certainty and we know what's going to happen and we can predict the high of the day. You know, we all used to say, and if you're not honest about this, then you're not being honest with yourself. I think it's going here and I'm going to sell it, you know, picking the high of the day. Raise your hand if you've done that. Raise your hand if you automatically buy the mid every time there's a retracement. Raise your hand. Raise your hand if you keep your stop below the mid. And raise your hand if you automatically buy the mid. Or, you see what I'm saying? Why? Because that's retail trader behavior. Raise your hand if you just buy the VWAP. Why would you do that? And here's the answer, by the way. Sometimes it's qualified, sometimes it isn't. Why do we have random winnings? Maybe you're not in alignment with the market. Maybe everybody has random winners, but if you're in alignment, can that help you reduce the number of losses, even though you're still going to take them? Because now you're in alignment with what? The trend. If you're long, no matter what happens, you're in alignment currently with the current condition of the market, and you are going for this, and it never has to get there. It doesn't matter. What matters is knowing where your trades are, getting risk neutral. So the worst happens is that you scratch your trade and your broker sends you a gift basket, and understanding market mechanics and order flow. Because then you can drill into this and see what most retail traders don't see. They see a candle or whatever they do, you know. We all have done it. But what I see with order flow is the participant behavior. I'm not waiting for a fixed time-based structure. I'm waiting for absorption and then the behavior. I can tell right here that I want to be long. I can tell here I want to be long. I can tell here I want to be long, and I can buy this here, here, there against this, there against this. I'm not saying you should. I'm saying I could. Does that make sense? And I'm looking up now. You guys have questions. Do I have a method for establishing statistical probability? Aronach, that's where the work comes. The method is get a large sample size of these specific behaviors in alignment with the condition of the market. The condition of the market is actually what tells us what trades might be qualified. Now remember, what am I anticipating? Right? Why are these on my chart? Because I understand how the market works. I certainly can't predict what it's going to do, but I understand that the longs in here, which would be me, and I'd be risk neutral, that their stops are here, here, and here. If I'm going to get long, am I going to do it ahead of these stops? No. Or my stop is outside. For me, I want to have it come down and pick these guys off, get a buy trigger, and then come back to where the sellers took over for a scale. And this is not a trade recommendation. Why would I do that, you ask? Because I understand how the market works. I understand retail traders, been there, done that, still there, now doing it. And because I understand their behavior, I don't want to do what they do. I want to use their behavior as an asset. How many times did you trail your stop here and here? Why would you do that? Oh, I don't want to give it back. What does that have to do with anything? You're not wanting to give it back. Who makes that decision? You? Based on a business plan or your emotional state, fight and flight, fear of loss. Gee, I was up $200. Now I gave $100 back. I better get out. Who's driving the bus for you? You're the lunatic under the hood or business? Are you in business or is this fantasy island for you? Are you playing a video game or do you have a statistical edge? And do you accept you can't predict anything? A tweet comes out, somebody, sneezes, the market, throws a fit and everything goes out the window. So how are you going to predict what's going to happen? You know what I mean? So where are we trying to go? Pick the stops off. And we might have right here. Now, the other piece to this is, if I have a 90% probability of getting here or the one underneath, what do I want to do? Well, I already rejected the one below. For me, continuation trades, and again, you have to vet this for yourself, not a recommendation. I'm going there. And then if I get up there, I'm going to be looking at this. That's it. It's not more complicated than that. Let me tell you what it is. It's random. Substitute the term it's complicated with randomness, because it is not complicated. It is random. Big difference. Because if you come to Trader Lab, you can sort this out and organize it into a conditional process. If this, then that. If not, then what? If this is too low, I can come out here and check it. So if not, then what? Up. If I come down here and I get my stops out and I see absorption, what do I do here? All I did was take out the weak longs, which are there. Remember, we put our stops with everybody else. Retail trader behavior. Think like a retail trader. Don't act like one. Use your trapped equity. All the dollars you've thrown out the window, micromanaging your trades, because there's noise and rotations. It's just part of the way the market works. They're going to pick you off, and it's not them getting you. It's you getting yourself by poor market mechanics and lack of understanding. Not your fault. It's typical. So what I know is this and this. So for me, if I have an open statistic, there's a little drool on the keyboard, because if I come out here first, what do I have? Overnight volume point of control. That was too high. Well, maybe it's too low. What else do I have? An outside edge. And what else do I have? Stops. I'm putting all the pieces together. Now, this might be it right here. And you're going to say, well, would you take that? If it's in my plan and I have enough range to get risk neutral, which is like here, I'd have to enter on the head of a pin. I can do that. I'm not saying everybody can do it. I've been practicing a while. But the better trade is to get this out and this out and get under here, because I got more range. Okay? Otherwise, I'm just sitting long. This trade hasn't failed, you see? Does this make sense, guys? Yes, Aaron K. If the only statistics that have any value are the trades that are aligned with the current developing condition of the market, it's not plug and play. That's why most traders fail. They just kind of put the market in a box and they do everything the same way. Market is not the same condition. The market we had earlier when we were rotational is not the same condition as we're in now. It's changed. So if it's changed, I have a different plan. It's not that different. It just means I'm still only taking longs, but I have specific trades. The IBF below is a long. The IBC is a long. These are structured trades. I don't have to trade any other trades. I'm not trading all over the place. What does that do for me? Every time I put risk on, right? It's a problem. The more risk I put on, the more probability it stops. So these are longs. That's a long. This is a long. Then you're going here, reversion, and either it's going to fall on its butt or it's going to come out the other side. That's why this is the target. And then I pull back here. Guess what? Too low. Resistance. See where this stuff comes from? Now, you may say, well, what about getting long here? If it's in your plan, you can. For me, this is an obstacle. So if I'm trading this, I'm coming here. Let's talk about what's really going on here. This is the mean from yesterday. It's mean. If I come down, I'm reverting to the mean. And of course, who knows, slop. If this mean or retail price is too low, then I revert back to the mean in the developing time frame. Then I revert back to the mean. You'll like this. Either that or you're going to throw a shoe at the monitor. The mean in the ETH is there. So I'm going from the mean below to the mean in the developing time frame to the mean from the ETH. It's price checks in aisle 3. You ever go to supermarket? Oh, too low. How about here? Fair. Then either too high, back, or since we're in an uptrend, let's check this one. This was too high before. Let's go back to the store. Well, now you can't buy S&Ps over here, and you certainly can't get them down below. So then what? We come back to this target. If I get above it, now I'm back in alignment. See the behavior? Right? See the behavior? This is where the sellers were. Target. And now if I'm above here, what does that tell me? If this is too low, I can get long here, and now I'm looking for too high. This is the auction, and wherever that is, that is. Liquidity here, and then it's trade management, whatever it does, and we're still going for this thing. I don't think we got it, did we? No. So, going for that. Or, the or is, you say, I've had enough, and you hit the plunger and you're out. But where's our next longs? Not a recommendation. Aren't they out here? Let me try to get this back here for you. Here, let me try. Hope you're getting something out of this. Please give a like. If you like what you see and you're curious about all this, the Trader Lab is available to you. There is no cost. I hope I can do this. You can use the link in the bottom of YouTube. Now I have a location. You remember. You see how these trades are set up in advance? Now, it's not mechanical. I'm going to have to see a trigger. Let's try to get this thing cooking here. So what do I know? Stops there. You notice consistency on my part? Now, the market is random, so what does that have to do with anything? I know I have stops here, and I know I have stops here. This is my outside edge, the low volume node, and it's an area, and it's tricky. I always think the joke in Trader Lab is mean reversion. It's mean. Why? Because you can't tell. Is this it? Came to the location. Well, for me, I require it in my plan to pick the stops out and it doesn't mean that it won't go up and hit the target from here. Now, in my trade, I'm long from near the low of the day. So I don't have to mess with this. But if I wanted to, I'd be looking here. And if it doesn't happen, it's c'est la guerre. Life in the fast lane next. But here, let's go back to what we know. I got a 90% probability of taking out either the first hour's high or low, which was there. I have a 90% probability to take out the ETH high or low. Right now we missed the low. I'm betting on this one. What about you? And I know that I have stops sitting under here. If I get under here, before I get over there, I have a long, not a recommendation. If I never get here, I don't have a trade because I'm risking these guys, the stops here. The smart trade for me is the buyers that were here and here, that if I take the stops out, and here's the logic, that these buyers will activate and take the other side of the stops, and I want to join them. And if we don't do it, then it goes without me, or at least without me adding. Anyway, I hope that makes sense. This is trading in fractals. This is the auction, and this is a trade plan. And of course, whatever happens, happens, you know, part of the joy. You guys have questions? And please give a like down there. Hope you're getting something out of this. This is what the Trader Lab is. And if you're interested in this, of course, hit the like, subscribe to the channel, and use the link down there to visit the Trader Lab. There's no cost. You download the 60 PDFs. The Trader Lab is a serious community. It's about the business of trading. It's not romper room. There's no nonsense. This is business. And I know there's, you know, and I'm going to tell you something else. You know, I go out and look at YouTube and, you know, like you do, and I don't do this Instagram and TikTok. I can't handle it, but I do look at what's posted, and I see all this ridiculous stuff out there, and it's really disturbing because anybody can post and quote, be an expert. Anybody can say anything, right? Okay. How do you, the one indicator you need, and they show you the winning trades. You could have no indicators and show winning trades. And then you go to the chat and you pay a subscription, or you buy the magic indicator. I don't know, but you know what I'm talking about. And how's that worked for you? By the way, we've all done it, you know, so no big deal. The big deal in this is learning from what your investment has been. So in other words, all the stops you've taken, all the trades you've messed up, all the things you've bailed out and mismanaged, all the selling the high of the day or trying to pick it. You know, we've all done this ridiculous stuff in our journey. We all have. Nobody's immune. The thing about it is, when you continue with a process that has random outcomes that are positive, but with no edge, you're still a loser over time, even though we have intermittent winners. You need to understand this. And the other part you need to kind of come to terms with is all those dollars and all that time that you've put in is an investment. It's trapped equity. How do you release that equity? What I found out was, early on, I started building trading systems. When I say early on, maybe 7 years or so into my development, early. And what I found was, we all get stopped out. I started thinking about, why am I getting stopped out? You ever think about it? Remember what we're looking for. I'm getting stopped out. So I'm saying, well, why? Maybe I shouldn't do that. Maybe I should think like a retail trader, but not act like one. This is my location. Now, this is not a recommendation. This thing can go to zero. Remember, neutral day, we can come all the way back inside here. So I know that, but I have this probability. You see? So now my plan suggests look for longs. And this is not a recommendation. Let's just see what it does. So that trapped equity, I built trading systems that would trade in the stops. I said, I'm not doing that anymore. But there's trapped equity. You have trapped equity. Let's not do what we've been doing if it doesn't work. Winning trades are not how you measure what works. Profitability. So everybody has winning trades and sequences. I mean, I had winning trades, of course, 2, 3, 4 in a row, winning weeks. I think I got it now, but no. And then it all goes, you know, it falls apart. And that's just because it's random. Now, we're looking for what? Where is it? It's there and here. So I'm looking for something. I don't call trades, so I'm pointing out behavior for you to consider. And this is the area. And then, where were my sellers? Here. So I'm going to look at where the other side took control, which is there, right? Sellers are there, buyers are here. So this is my resistance is really kind of like up here. So if I get long, who knows? Where am I going? To get risk neutral. Are you guys with me? This is Trader Lab, not complicated, just random. Alan, what's the question? Would I put more significance on one or other that I've marked out? Yeah, I'm clueless, Alan. Thanks for that. Well, no, what I am clueless and proud of it. Here's what makes this important. I know this was an important level, right? That's why it's here. I know I have stops under these guys because that's what retail traders do. I didn't take the long here, even though I saw it, because my stops were not taken. This is my first location, and this is my backup location, because there's stops under here too. What else do I have? Notice the order book. Anyway, that's a long. I don't know what else to tell you. Are you guys good with this? And where am I trying to go? So I'm long in theory from the low. This is either an initiative trade or an ad for me. And my scale would be there, and then I'm going for this and one for, they say, for the, the Hail Mary pass. And I have another target area in here, but it's less, there's less structure because I'm out in space. How about a like? If you're in YouTube, show some support, please. Encourage me to continue doing this. There's no cost for this. Trader Lab is a advanced education trading portal. It's open to everybody. And again, I don't know how long I'll keep doing this. When I'm showing you these trades, they're trades I'm not taking. So I always have a bit of a dilemma with that. But the key to Trader Lab is it's not about me, it's all about you. But you can benefit from the tuition I've paid, the trapped equity I have. You have trapped equity also. Take what you've learned, but if it doesn't work, take the pieces of it. And it's not indicators. I don't use indicators. So how can I do this? Because I removed all the stuff that didn't work because I was looking for certainty and I thought the answer was in the indicators or timeframes. What I found was that's the problem. It's not the solution. So I had to change my beliefs. And that wasn't easy because I believed I was doing the right thing. Look at all the winning trades. But I couldn't maintain it because we tend to go back and curve fit. And when I built trading systems, I was actually trying to solve the problem by having more indicators and more optimization. So I actually kind of created my own problem. Part of the joy, right? By the way, I'm going to show you what the Trader Lab community looks like. This is the chat. It's open to all of you. You can access this. Oh, you're in the long. Good for you. So all this is going on. Posting, charts, comments, mutual support. Thank you for posting that. So you can see higher time frame stuff. This guy, he's in there. And there's a library of webinars. This is where that single was that I was talking about. It was here. It was resistance, right? Now it's support. You've heard that concept. This is the last long. All laid out in advance. How do I know this? Well, a lot of work. Doing this going on 46 years. Believe me, a lot of work. And a lot of lost years. I wish I could get them back. There was no education when I started. Thanks, Ned, for curating this. This is the primer webinar. It's got about 36,000 views, something in that area. 32, I don't know. I'm not counting anymore. This gives you a high-level overview. It's about 1 hour. Then meet the Trader Lab. This is advanced trader methodology. This is advanced. This is not romper room. But advanced doesn't mean complicated. Advanced means not what the retail space is typically doing. Most traders I know who are in this business and actually are career traders are using aspects of this process. T46 in the Trader Lab mentioned this yesterday. It's absolutely true. I mean, I know guys that are trading 20, 30 lots of minis, actually up to 50 on a special day. They're using elements of this. Think about who you know, if you know anybody who's been in this business professionally and basically pays the mortgage with it. The ones I know understand market mechanics. They are not indicator based. They might have some indicators thrown around in there to support what they know in this space, but the indicator does not drive the bus. The auction and the participants drive the bus. You can learn this. Watch this one. I planned, I saw, I traded. It's an overview of just a day in the life. And this one, stop gambling, start winning. Most of us are gamblers. And that's because we're just making it up as we go. By the way, remember where our target is. Going for this. Now, I always take my exit a little bit ahead, leave some for the sweeper. And now you can get a counter rotation. Trade could be done right here, and you're back in your Barca lounger. And then this one, trapped in trader groundhog day. That's me. That's where you work hard and you keep tweaking and tuning and you get the same outcome. Still random winning trades. You see what I'm saying? But it's the same issue. And a whole bunch more. Hope you're getting something out of this. And please leave a like in YouTube if you're visiting. Use the link down there if you want to visit Trader Lab. There's no cost. It's a great community. I mean, I think and it's about the traders. There's nothing else to it. But if you're not successful, in spite of your winning trades, and you said, I've had enough of that, it's up to you to draw the line in the sand and to say to yourself, there's no holy grail. There's no secret sauce. There's no magic indicator that solves this. All of that is the problem. And again, it's my opinion and based on my experience. As you guys know, I managed money. I sat on trading desks. I've traded, educated other traders on a desk and otherwise, and then I do the same in Trader Lab. The reason I'm able to do it is because I was able to train myself, and I took it and removed all the complexity as best I could and kept it simple. And then I related it to other things in my life, like shopping. If you are a shopper, you can understand trading. It's just a matter of, the old saying, buy low, sell high. If we trade fractals or rotations, what's high and what's low? Isn't this selling high and buying low and selling high? Isn't this buying low, selling high at resistance? Buying low, resistance, selling high, target? Is this a methodology that you can relate to if you put the time in? Come to Trader Lab, no cost for it. Download the 60 PDFs of these structured trades that I'm sharing. It's not plug and play. Don't waste your time if you're looking for that. This is going to require you to rewire your thinking and to open your mind maybe that this is not a business of indicators. This is a professional business. And if you want to build a career, you got to start with the first step. And that would be use the link in the bottom of YouTube and visit the Trader Lab. And please leave a like on the way out. Have a terrific weekend. And I want to thank all of you for supporting and visiting the Trader Lab. Have a great day and a great weekend. Don't forget the like.